Today, I'm going to look back at Toronto's crazy roller coaster ride of a housing market in 2022. My name is John Pasalis, president at Realocity Realty. You can catch all my latest writings on Toronto's housing market at movesmartly.com. If you have any specific questions about buying, selling a home in Toronto's crazy housing market, you can set up a meeting with me by clicking the link below in the description, movesmartly.com/meetjohn, or send me an email at askjohn@movesmartly.com. So it's January, the start of the year. I think it's a great time to look back and see what happened in the housing market over the previous 12 months. Not everyone follows it as closely as me or some of our viewers. And even if we do follow it closely, I think it's good to take stock of what happened to kind of give ourselves an idea of sort of how the year ended and what we can look for in the year ahead. So we're going to take a look at the housing market in 2022, but to do that, we actually have to look a little bit further back and take a look at what was happening the year earlier. So this next chart is going to just show the average price for low-rise homes in the Toronto area. And I think low-rise just because the price effects are a little bit more exaggerated. They're more extreme than what happened in the condo market. But condos saw a very similar price pattern. If we look at the average prices in 2021 and 2022, what we'll find is that average prices were actually flat for most of 2021. They hovered around 1.3 million. And then all of a sudden, just out of the blue, the market exploded in the second half of 2021, and prices really started to accelerate. And we can see this sort of path straight up. Prices went from, I think, 1.32 million, peaking at 1.685 million in February of 2022. And that's why I said we had to look a little bit back, because that momentum actually started around September. Now, when we look back and say, okay, what happened? What caused this? I mean, the reality is there's no concrete explanation. I mean, when I speak with policymakers, people who are obviously concerned about what's going on in the housing market, many of them weren't surprised by a bit of a boom we saw in 2020 when the Bank of Canada lowered rates basically to the floor. But this second acceleration, the one that happened in the second half of 2021 and the beginning of 2022, caught most of them off guard. I mean, prices went up, what is it in low rise? 27% in 6 months, from 1.32 million to 1.685. Condos went up about 19% over that same period. So there's no, concrete explanation, because rates were low and prices were flat in 2021 in the first half of the first 8 months or so. So it's not like it was some big policy change. Something just happened. And this is the interesting thing about the housing markets, that part of it is certainly behavioral, meaning like these mass shifts in sentiment and preferences. And if something happened, all of a sudden buyers wanted to rush in. And that's kind of what led it. It's a combination of buyers and potentially investors that fueled that boom. And it really was sort of this classic example of a speculative kind of housing bubble, this fear of missing out, this irrational exuberance, that we read about. This is exactly what the market was, especially as we're leading up to sort of those last 1 or 2 months of 2021 and the first couple months of 2022. It wasn't uncommon for homes to be getting, 30, 40, even 50 offers on their offer night, like 50 buyers competing for the same home. And I know a lot of people think, well, this is just because agents priced the homes low and they weren't realistic prices. 100%, that's part of it. But you can't just price low and get 50 offers on a home at any time. Back then, 9 in 10 homes were selling for more than the asking price. Today, it's probably less than a quarter are selling for more than the asking. So, in today's market, you can't just price low and have 50 people show up. So this is really a sign of how competitive and frenzied the market was at that time. And people just kept paying like $30,000, $40,000, $50,000 more than what a home sold for 2 weeks ago, because they felt like they needed to just to get in the market, just to win. And the interesting thing was, as crazy and as rapidly as it started in September, October, the slowdown was actually relatively quick. So I started to see some of the earliest signs of the market slowing down, not so much in the spring, but actually in February, sort of the peak of the market where the price was the highest. In late February, I started to see some of the earliest signs, and the early signs are fewer showings on homes, fewer offers on offer nights, more offer nights failing, meaning the seller not achieving the price that they wanted. And when that happens, they have to take it off the market and list at the price that they actually want. So for those people who are new to Toronto's housing market, this is why sometimes you'll see sellers increasing their asking price. It's because the original price wasn't realistic, wasn't what they wanted. And when their offer night fails, they have to increase their price. So, and again, the interesting thing about the slowdown that started in end of February, continued into March, was that rates were still low, and I think one of the reasons we think, well, why did the market hit the brakes and all of a sudden slow down? Again, there's no concrete reason for it. I think there's probably a few reasons. I mean, part of it is, I think, certainly buyer fatigue. I mean, if you're a buyer buying in that market, a lot of people just gave up and said, this is ridiculous. I'm getting out of this, and hit pause and move to the rental market. Part of it was certainly fear that interest rates or higher interest rates would push down home prices, because at that time, in late February, rates, were still where they were at record lows. It wasn't until March where the Bank of Canada started increasing. And, I think to some extent that maybe fueled a little bit of fear and maybe hope for buyers that maybe if they just wait, they'll get a better price. So what happened is sellers or buyers pulled out of the market, and prices actually plummeted pretty quickly. I mean, prices fell from, where do I have it here? From the peak of 1.68 in February to 1.29 million in July. So we basically lost all of that growth that we saw over the, September 2021 to March. We basically lost it all in 5 or 6 months. And it's interesting because, I mean, if you study housing markets, that's not how prices are supposed to adjust. They normally don't crash that quickly. Like usually in housing markets that are slowing down, we typically see inventory build up first. Sellers start getting stubborn and they start waiting for their price, and inventory just keeps building. Prices stick for a while usually, and eventually prices start falling. So usually the process is a lot slower than what we saw in 2022. And we have to ask, well, why did they crash so quickly in 22? Well, it was a unique scenario where, at least in Toronto, most people who buy homes and have a home that they need to sell buy first, and then they list their current home for sale after the fact. And that normally works well because the housing market is competitive. But when you're in a market that is rapidly cooling, it puts pressure on you, because if you bought a home in February, March, and then you went to go list your current home in April, and all of a sudden you're not getting 50 showings, you're getting 8 showings, I mean, you start panicking because you need to sell your home in order to afford the home you just bought. And what happened, interestingly enough, from February to July, it's like week after week. If we look at kind of weekly average prices, it was basically like a straight line down. Prices just kept falling from one week to the next. So every seller was taking 20 grand less than what their neighbors sold for last week, and that happened the next week. And then by the end of the month, prices are down 80 grand for that month, and then that kept happening until July. But what happened, of course, is eventually we started to see fewer people buying homes and then listing, because of the stories that sellers were having a hard time selling. And what that did partly is it actually pulled buyers out of the market, because people didn't want to buy and list, and people were worried about the timing of both of those. And anyone who needed to do both by the summer were usually selling first, right? Because they would feel like this wouldn't put as much pressure on them, and then they could take their time to find their next house. Now, the other kind of interesting thing was that prices plummeted rapidly, which I think is interesting and not typical for housing markets. But by July, I think the Bank of Canada had increased rates by maybe around 200 basis points or something like that. We were, I think, at 2.5% by July. And then, of course, in the second half of the year, they raised another, I think, 175 basis points. So rates kept going up in the second half of the year. But the interesting thing is that prices actually plateaued. that we didn't see in the second half of the year, this additional pressure on prices, even though rates hit over 4%. And again, some people would expect prices to fall further because rates kept going up, but that didn't happen. And I think one of the reasons why it didn't happen is, quite frankly, because sellers were holding out. Sellers were, if they weren't, and I wrote this in one of my past reports, I can't remember which month it was, but we looked at the number of canceled transactions from properties that were for sale, but then sellers just took them off the market, and they were a lot higher this year than in previous years. And in particular, in the condo market, a lot of those people who didn't sell their condos just ended up renting them. So people were both holding back listings, and then if they didn't get the price they wanted, were just taking them off the market. And it's this tight inventory or tight volume of listings that actually, up until the end of 2022, actually put a bit of a floor or temporary plateau on house prices. And this is one of the reasons why the last sort of maybe 4 or 5 months of the year were relatively, I'll say, boring, because nothing much changed. Sales were at 20-year lows, which I didn't touch on, but yeah, by the summer, I think we hit 20-year low in sales, and that continued pretty much for the second half of the year. But new listings were also unbelievably low, and this really kept a little bit of balance in house prices. And if you are a buyer in the market, your biggest pressure was there's like not a lot to look at, and we had this issue with a lot of our clients. They started looking in different neighborhoods, started looking at fixer-uppers, even though they didn't want fixer-uppers. And then if you're selling, it was a weird market as well, because the nicest homes were actually getting multiple offers and selling for, in some cases, way more than what they were even worth. And we saw that in our neighborhoods, like bully offers, multiple offers, just like some ridiculous prices. And you're thinking the market's so slow. What are these people thinking? And then the dumpier homes, or the homes that weren't as renovated, were sitting on the market longer and selling for, in some cases, below what they were worth, because not a lot of people have the capital to do renovations right now. So those are some of the dynamics we saw in 2022. It was a crazy roller coaster, obviously, with the run up, the crash, the plateau. All of these changes, quite frankly, were unpredictable, which is why I don't really like making predictions about the housing market. We never would have anticipated all these peaks and valleys that we saw over the past year. In an upcoming video, I'm going to chat about some of the things that I'm going to be looking for in the market in the year ahead. But if you have any questions about this one, please post them in the comments below, or send me an email at askjohn@movesmartly.com.